Yeah, my daughter, well, she lives there in Norman, Oklahoma, just outside of Oklahoma City. And was it Eden, Oklahoma? They had a pretty good tornado that touched down the other day. It killed a few people.
Yeah. We actually had two fatalities a couple days ago here in North Texas from tornadoes.
Uh, yeah.
It's
What part of
it's
North Texas you from?
I'm outside of Fort Worth
Okay,
on the west
okay.
side.
Yeah, I lived South Dallas there at 35 and 67, right where they split, south of Dallas, downtown. I lived there
Okay.
90 January 97 to 2000. And then of course my wife and she got a lot of family that lives in Plano, Richardson area, Garland. And
Okay.
actually, yeah, and actually left Garland. Oh my goodness, I'm just drawing a blank. Uh Round Rock. So Round Rock?
Yes, that's
Kind of northeast Plano.
northeast. Yeah, I would say northeast of Dallas. Yep.
Yep, yeah. So Round Rock. In fact, that's where we're headed next. This Friday, we'll head to Norman and then ultimately Plano and Round Rock for a sister-in-law's wedding.
Oh,
So
excellent.
yeah, so we'll be down in your neighborhood.
Yeah.
So
You say neighborhood, but you're still like an hour and a half away.
yeah, yeah. If you're like on the Fort Worth side, and I'm on the northeast side, yeah, yeah.
Yeah.
Oh, well, very good. I tell you what, we got a lot to cover today, and it's going to be a lot of fun. Let me share screen because, well, first off, let me kind of hear from you a little bit. Give me an idea. That way I can better tailor what I feel is going to be valuable for us both. Um, and then, but I want to tailor to where you're at, what your needs are, and what you're experiencing.
Well, it's interesting. I will go several days with gains and do well, and then I'll hit a rough patch, you could say. And um, like today was kind of a rough patch. I did blow up one of my accounts. It was just one of the what do you call them? The uh, oh my gosh, uh, demo account.
Okay,
But
evaluation.
then I was able to recover on my second account. Whatever I lost this morning, I was able to regain over the afternoon. So I think it just comes down to sometimes I I look at the candles and I'm like, hey, it's headed up, and then it just reverses on me, and yeah, you kind of lose that stop whatever your stop loss was. I lose it, and that just kind of eats at you over a few trades. So
It does. Um,
yeah.
Man, you hit on my number one focus for 2026. One of those things you just highlighted, and then two, how valuable that first trade is um, from a eat at you perspective, and it's not that we want to feel like we're trading on house money if we win the first trade because hey, we've got positive P&L and we've got a little cushion. Because that's just kind of the wrong mindset. Because every trade needs to stand on its own. Every risk always needs to stand on its own. But there's also some validity to it because when the trade still makes sense and it may not be going in your direction at that moment, that's where we can still remain in the trade as long as it makes sense when we have that first trade that has given us a little cushion. So it's a psychological thing. And so really what it comes down to is, does the trade still make sense? Because we have to look at the overall structure, got to zoom out, look at overall structure and say, hey, when does it no longer make sense? And to me, it's not, like we clear up this area here. Well, this isn't necessarily where it no longer makes sense if we come back down into this area, because this would be just a retest. But where it really makes no more sense is when these higher lows get taken out. So, and this is not a real, because this is just a really nice bullish move, but our goal, and this is the NASDAQ. Let's go ahead and jump over to the ES. I look at ES when I'm trading, executing on MES, if that makes sense.
Yep.
Um, but so we look at all this support through here. So wherever we decide to get in through here, obviously the earlier the better, but we really have to assess, hey, if I get in here above this VWAP, this candle, well, I'm going to get stopped out quite a bit if I think it no longer makes sense here, because this is a valid retest to kind of come down,
Hmm.
you know. So bigger picture, bigger plan, and this is where size is so valuable to understand. It's like, hey, it really no longer makes sense when this support, these lows are getting taken out. In other words, if it rolls back over here, now it's no longer making sense. And that's rough if we do get in up here. But you're going to make more over the long run by giving it room and having an exit plan in advance. Now, that size is what it's all about. Size and your overall plan. Because depending on your strategy, and if you're really just scalping for a few points and you're like, hey, I am not going to remain long below this VWAP, especially based on this behavior. You're like, it makes no sense for me down here. Now that's absolutely valid. And it might be this wick right here where it turns around and goes where you intended. You're going to see that at this equal amount of times. So then you get in here off of VWAP, it wicks up, it looks good, it comes below. You got, oh, I got kind of a shooting star. So then it's below VWAP, so you just lost, 5 points. And then she does go up in the direction you want. But now you see this red candle, electronic trading hours VWAP, the Globex VWAP. Oh, I'm getting rejected from there. So then you're out again. That's that paper cut. That's indecision.
Yeah.
That's not understanding bigger picture what's going on. Hey, big money protected their buys down here. This trade no longer makes sense when this area gets taken out. So that's one thing.
Yeah,
Two,
and it was
wait,
that middle part there you're pointing to is where that's where the cut started getting me was that up and down because I was like, okay, the market's reversing, and as soon as I thought I was setting
here
my
or
trade,
here.
I was like, okay, it's headed the right direction. It would just come down like that real big red candle there got me, just came right back down and hit my stop. And
Okay,
yeah, so it can happen quicker than you
beautiful.
think.
Um, Very good, because we're going to look at a couple things that are going to define that. Because big takeaway today, I want to start at top level, and I want to kind of show you what my plan for this week is, uh, because it's a repeat of what we had a few weeks ago when we were just going sideways. And I think that's real important because this played right into my plan today. Now, I've got a mental issue. This solid purple is an anchored VWAP. So it's VWAP that starts when the New York session opens. Okay, this dotted purple is the session, the overall Globex VWAP, and it starts when the session opens Eastern Standard Time the day prior. Okay, and I'm always, especially after this first hour, what is the relationship between this New York session VWAP and Globex? When this New York session VWAP is below the Globex, duh, hey, overall selling pressure is a little bit stronger than buying pressure because just since the New York session opened, the volume weighted average price is less than, the Globex. So it's come from a higher weighted average price. So it's obvious mathematically, but it's such a strong visual indicator. And my biggest losing days is when I continually try to go long and I don't get out in time when this New York session VWAP is below. In other words, I'm counter trend trading, expecting reversal, and I'm getting trapped.
Yeah. Yeah.
Okay, so that's number one for me. Is now this relationship between these two VWAPs is extremely important. Um, and I was long all day today. Now I took a couple strategic shorts. One of them was a lot of fun. I'll maybe even talk you through that one there. But when we come back above this area, and again, here's that New York session VWAP. We broke and I needed it to hold. This wick here, I don't let wicks make decisions, you know, and it held. It stayed above, and we kind of broke up here. Now I'm above both VWAPs. Time of session is important. It's 2 o'clock in the afternoon. So that's to me pretty bullish. So that's where here I'm very fingers are pretty heavy on the keyboard. I'm indecisive. I don't know. I've got a battle between the VWAPs. But once we come into here, I look at this as a healthy pullback with this candle here, a 5-minute time frame. Absolute confirmation. It's like, okay, buying pressure is stronger than selling pressure. So now it's time to actually decide on a valid target and go ahead and hold for a little bit. I was a tick shy of my target here. Come back down, tick shy. And so when this red candle come in, I ended up, no, the tick shy here. So I ended up going short here. And it come up and got me. I was back up to here, still was about 2 ticks short of my original target. So I'm like, man, that really bit. So now I'm down double what I wanted to end the day. And I was just trying to save one account here. Uh, but then I was able to kind of come in and I had to milk for everything it was worth. And I got out right here and I was down 15 points for my goal, which is like $338 on a 50K, trading like 5 micros. So I salvaged it because I broke a big rule down here and I switched over to basically like a mini, and I was just gonna try to jump up here and slap this VWAP. Well, she just rolled right against me real fast.
Yeah.
So I was down. I was way past where I would have allowed a funded account to go. But when we bounced back up through here, my confidence that this was support was really strong. And so I was back to, I would have been green if I could have got one more tick right here. But then I went the wrong way, and it was just some paper cuts, essentially. But I ended net green because I got 8 accounts right now. 7 of them were green, and one was just down 338. Um, but very important, and I encourage you to um, consider this relationship between these VWAPs. From the start of the New York session compared to the Globex. And my VWAP here, and this is Michelle, I know you'll probably listen to this later, but again, I'll just kind of review VWAP as an indicator. When we look at the settings there, um, anchored period, the session. So at the beginning of the session, not New York session, but the actual dated session. So Tuesday's session actually began Monday afternoon Eastern Standard Time or Monday evening. That's this indicator. And you can kind of see it's dashed purple. And my upper band and lower band dashed white. And that's just how I easily, hastily can look on my screen what I've got. Now I look at my anchored VWAP, solid purple, solid white, solid white. And all I do is when the New York session opens, I'm usually looking at the 1 minute anyway, just to kind of see how price is behaving. But I just anchor it to that very first 1 minute candle, and then I let it kind of mature. Um, and then of course the bands themselves, I'm going to go ahead and get rid of this volume profile over here because this is the same volume profile over here on the left that we just deleted from over here. The one on the left essentially will include the entire Globex session. So when price opened up yesterday evening, clear up here, we can kind of see how we've kind of got a small B. We talked a little bit about that a couple of weeks ago. Small
Yeah.
B. So this profile here is actually pretty bearish. You got to keep in mind, though, that this really is not mature until at the end of the day. Here's really the profile that we were going off of. This is what we have today. So really going into the session that's just starting today, this is actually a very bearish volume profile from Tuesday's perspective. So the next 24 hours is really, here's a lot, 70% of our transactions from the last 24 hours occurred down in this area. Okay, so that's kind of a bearish profile that we talked about. Small B, bearish. All right, let
And
me
that profile includes the electronic trading hours as well, right?
that is
Okay.
absolutely right. This is Globex clear over here.
Okay, yeah.
So when I put on my anchored VWAP for New York session here, at the same time, I've got this anchored volume profile.
Yeah, that's what I've been doing since our last call as well. Yeah.
Yes. And I will usually after about an hour because volume for that first hour, it's just developing over here. We really can't go by, but what we do have is we see how session here, starting New York session, how is it lining up with this value area low, value area high from Globex? So after about an hour, then you start getting the footprints over here, and you'll start seeing these. Ultimately, by the end of the session, of course, the volume profile for Globex and this point of control or volume profile for the New York session, they're very, very similar. Um, just based on this is still building. This profile that started yesterday evening is building all the way through, um, 5 p.m. Eastern Standard Time. But when we anchor it from the opening of the New York session, it's just giving us a slightly different profile. But what's beautiful, Kevin, to realize not really making decisions in that first hour off New York data, but because of the Globex data, again, that Globex high, Globex low, that upper value area of Globex is extremely important. So is that low value area. And when I say, like upper value area, so here's your value area, the gold. 70% of all transactions for basically 23 hours took place from here to here. Okay. So that's another reason understanding these profiles is real important. Wouldn't you like to be in a trade where there's 70% of your transactions are occurring? And so if we can get in at the bottom value area low, and 70% of the transactions are going to occur, and we've got a value area high already printed on our screen, hey, I've got a high probability that I'm going to move back up through this high volume area. Where it's going to start losing strength is above these gold bars. Now, this is where you start seeing the exhaustion. You could get some quick moves, but there's low volume. That's indicative of liquidation. Big price move, low volume. So there's really nothing to sustain that. But if you've got some major volume spikes, then sometimes it can be sustained. Um, so let's kind of pause there, because those are what we spent 2 weeks ago. We talked quite a bit about volume profile. And what I kind of reviewed right there was VWAP, New York Session and Globex, and the volume profile. Two different things, but they literally work together. And you're looking for the confluence of these Globexes and VWAPs working together. Okay, and what does that mean? Okay, this kind of, you got the VWAP here. So session is kind of ended here. Price above point of control. The Not a real clean chart. Because what we're looking for and see time and time again, and you see dotted white, see even solid white, dashed white. That's a VWAP band. The dashed white is tied to this dashed purple. Dashed white is an upper deviation band for this VWAP. Solid white.
And I'm sorry, Jake, it looks like right there you have another VWAP anchored.
I do. Let me delete that, because that is one of the things I want to cover today. And that's anchored to really lunchtime lows, Eastern Standard Time.
Okay.
So, yeah, because I don't want to get ahead of myself.
No, you get.
So let me put this anchored volume profile back on. Because what we're looking at, as you've kind of got this deviation band down here with this VWAP. Well, you've also got the deviation band, both deviation bands from both VWAPs. See how they're down here just right below this low, this value area low.
Yeah.
Okay. When these deviation bands kind of work as support, meaning we're not coming up, making a lower low, bouncing off at a lower low. That's where price is trending. It's generally moving away from balance and looking for another fair value, where big money wants to either bring the price down into another area or up into another area. But consider these bands from our VWAPs and how they line up with the upper value and lower value area of your profiles. Those are strong confluences. Very strong confluences. Yes, our risk, frustrating to assess, hey, what's market doing here? Because we are below that value area during all this time. Is it going to continue? Is it going to break down, or is it going to hold a support? But you can see there's a pretty good chunk of volume that did build in this lower value, but price found support down here. And so once we come back up into this higher volume area, it never did look back once we got up and going. We're above our deviation bands. It never looked back. It never came back down to these bands. Once we got above our New York session VWAP, it held. It never looked back. So another confluence. Now we're in some of this lower volume, and you can kind of expect price to kind of sometimes even move a little bit quicker. And we did have some high volume up in this area. So we had a lot of reasons to say, hey, maybe we're not going to come up and test the session highs, but we do have a lot of volume up there. Regardless, I'm definitely looking at this high value area. I want to make it back up through the gold. That is almost just as likely to meet that target as is 5 points anywhere along here. And my 5 points is what bit me down here because it was a high risk because of the size with low reward. And that's one of the things I'm getting away from. If I can look at the bands, the volume profile, volume weighted average price, now these key levels become targets. 5 points is no longer, I want a higher reward. So it's also going to cause me to consider size, because if I'm going to get in above this band, okay, things look good there. Maybe I do get out when I get this indecision. If I hold on to it, here's a good opportunity just to maybe add another micro or two. I see support here. This green candle comes in. I add another micro or two. So maybe I've got, I just got maybe got 2 micros there. I add maybe 2 more, and I added maybe 1 or 2 more here. Well, now I've got my full size. Say 5 micros is actually my full size. I've kind of scaled in, validating this support. Trade is wrong down here. But now I've got my full size, and now I'm able to write it back up in there. So let's say if 5 micros is your normal size, well, we don't have to get in 5 micros right away. Because if it takes off without you getting in 5, well, you've got something taking off where you're winning. If it rolls back on you, but you're looking at getting in at support, not up here at a breakout, that's where I was going to say, hey, we're going to at least hit this VWAP again. And I got in right up in here, and then boom, she tanked on me, and I had a mini. Just that.
Yeah.
Once in a while, I think I got some good momentum. I'll jump into a mini and just look for a couple scalps just to help it out a little bit. It doesn't pay overall. It probably does 8 or 9 times out of 10. I mean, it really does. But the risk is so great that boom, get up, go to the bathroom, cup of coffee, you come back, now you're down easily $1,000, with 1 mini. Again, my stops are down in this area, and so that's just wrong size, to have this much of a pullback mistake. Today was excuse me for 1 second. My phone is going nuts and I got to understand why. Sorry about that.
All right, no worries.
So size is good. So back to one of the first things you said when we started the call, and I also said, hey, that is my number 1 goal of 2026. And it ties into my reward must be greater than my risk. So when I'm getting in this area, trade no longer makes sense here. Well, I need to make sure that I've got a good target, at least 1-to-1 up into here. What size is appropriate to bring me back down to here, to where I've got maybe an opportunity to add a little bit more if it does come down here. If it breaks through here and this no longer support, then I'm just out. But keep in mind, this 70%, and when we start looking at these low value areas or these high value areas, this is looking for exhaustion. We're looking to go short up here. This is looking for bears losing pressure, bulls stepping in. We're looking to go long down here. 70% of our transactions, you can almost say, hey, 70% of the time the market is range bound. So what do you think you're going to be more profitable with over time? When the market is range bound for 70% of its transactions, and if you get in at the bottom of a range, or if you're getting in at the top of the range, coming back down, and 70% of the time you're trading within market balance or within a range, which means 30% of the time we're coming from the extremes and we're in a trend. Now, yes, here's your greatest opportunity if you know to get in, the nighttime you go to bed, it's like, oh yeah, we're definitely about big downtrend. When I wake up in the morning, I'm gonna be real happy. Yeah, that's a great opportunity there. But that's gambling. Because we don't know this. We don't know this. If we're managing the trade, again, looking at VWAP, pretty good break below VWAP. We're in rejection below VWAP again. So we just add to our position. Rejection below VWAP, we're just continuing to add. That's how you trade the trend. You look for these pullbacks. You look for these rejections at key areas, rejections below key areas, rejection deviation band. So here we're below that deviation band. That is coming out of balance. Price is trying to discover it's in a trend. You're below, you're outside deviation bands. That is a trend. Up above this deviation band, exhaustion here, here's where you want to look at getting in for shorts. Because if you're wrong, you know it right away. Where if you're playing a breakout, you come down here, well, it goes all the way back up to this second band. You've got drawdown 9 times out of 10 when you're playing a breakout. That's where a pullback minimizes your risk. Because if you get in here, you're wrong up here. If you get in here, you're wrong right there. See how much less risk you have? You get a nice move down to this lower band. You still wait. Hey, I'm finding support here. But you come up here, you see this rejection. So you could get in confidently saying, hey, I'm still wrong if price goes back up to here. But I am at a key level where I entered. So I am looking for entries based on a probability that I'm in a range-bound market. But here's the upper part of the range, at least for the first few hours of Globex yesterday. If we can go short at the upper limits of a perceived range, then we can always trade the trend.
So I have a question. Let's say you're going short where you had that rejection on the dotted upper white band. When do you know it's time to get in after you see that first red candle? Do you get in then, or are you already set up when the price action hits that white candle? I'm gonna have a short trade set up.
That's a great question. And what you're
That's
going to learn is a high probable setup because you already got a rejection wick here. You already got rejection here. A high probable setup is these deviation bands. If I go long here, I'm expecting maybe a small push. Can I retest this high? Potentially. However, I am not taking a target beyond this white line because that is my next visual. If I make it to this deviation band, I'm taking profits off the table. I'm expecting, because of this rejection here and this wick here, I'm expecting this to become an upper limit of a range. I'm expecting resistance here. Because I'm
okay.
expecting resistance there, Once I get these two wicks rejection, I'm looking at getting in as close to this band as possible.
Okay.
And that's the magic of kind of a VWAP wave theory, what they use, and these deviation bands. Um, Again, we've got low volume area, but this is golden when Globex session starts, because this is all our transactions from the time the market opened. This is golden, initially. The gold larger volume for the actual session didn't happen until later today. But realize, hey, you kind of got a lot of volume, a lot of transactions happening in here. You did have an upper limit of a volume profile, as much immature as it was, right after the U.S. market opens. It's very difficult. I don't trade here anyway. It's usually going to be 7, 8 o'clock at night. So like here's 8 o'clock. When I kind of see this, I may look at a couple trades and then I always want to close them out before I go to bed. But I've got some data here now that gives me a probability of a good setup. But to answer your question, the VWAP itself, irregardless of the candles, it's just price. How did price interact with that VWAP? Who cares what the candle looks like? They're going to look different on ticks. They're going to look different on a 1 minute, let alone a 5 minute. We are looking at the interaction and expecting a rejection or kind of a stop at this upper band. This is its last attempt to kind of go higher. And because it rejects, that's all we're looking for. The best entry is to get in as close to the key level or the band that you can. And so ticks make it a little easier because you get some of those signal candles right away. You don't have to necessarily wait 5 minutes. Here's a 5 minute
I
chart.
find that.
Yeah, this is a 5 minute candle, so that kind of makes it a little bit easier. It kind of wicks up here, a lower high. Again, just beautiful entry. And another thing I like about, I'm kind of within the band, and if it takes off and goes up, again, when I'm at a brand new high, I have very little risk if I am wrong and it continues up, because I'm going to come back down and interact with VWAP. Most likely, pretty soon, especially at this early in the session. Now, not always. We got to be careful when we get those bullish takeoffs. It's cut your losses because you have no idea stay it could stay above a upward pointing VWAP all night long. That does happen. But extremely important. So that the VWAP band itself becomes the price area that we're looking to make a decision, getting in or getting out. This is golden, meaning yellow, up until this point here. So you can kind of see how there's an increased volume here. We've got thinner volume here and rejection. So again, apply that type of approach wherever you're at down here. We start getting down to this thinner volume down here on the bottom and see exactly what happens. We get these wicks. We are not getting a continuation below these deviation bands. They are holding a support. They're not clean. They're not, because this is an average price. But what we are looking for is, am I completely getting rejection below these bands with lower lows? I'm not getting the lower lows.
Mm-hmm.
And that is beautiful. That was extremely valuable today. The challenge I had today, I had 3 50Ks, extremely profitable down to here. I was done. Closed those up. And then I had that one Blue Ski account, the one that I had to just try to get back all day, but I had my copy traded accounts. I think I did go long down in here, didn't get out up here, and I held for a little drawdown here. And because now I'm below this New York session VWAP is below this one here, I got back into where I was green on 4 of those 5 that I was copy traded. And I'm like, okay, I'm just done. That was green, just like $22 on 4 accounts. I'm like, you know what? I don't do really well when this VWAP is below this one here historically. I'm not able to go short below here. So I was like, you know what? Let's just not trade them today. And so I was kind of proud of myself because I just let them go. Uh, but they were still profitable. I had one that I was trading separate that wasn't copy traded, and I had to come all the way back up here to VWAP before. So it was late in the session, like again from like 5:30 in the morning. It was 10:30 in the morning, so 5 hours later before I finally got it to break even. But I did not add anything to its size. I just let it grind out. I'm like overall bullish. We're finding good support here. If it does flatten out and go sideways across here, I'm like, my drawdown is actually acceptable. I was okay with it, with a higher probability that we were going to get some type of move later in the session. Wasn't counting on that move back to VWAP as we talked about. It's um, almost can't count on it this year, but I did, so it broke even. So lucid accounts, copy trading, 5 accounts there, just able to get break even, like $20 a pop. That's better than a losing day, any given day. And then the blue ski, I've got 4 accounts over there, 3 of them opening range, very successful. Locked in a few $100s on each account, and I'm like, let's just close them up because I'm dealing with this here. I don't have really that strong bullish confluence. I didn't know how far we were going to come down here, but I did work at trying to recover the mistake I made on the one and got it back. Here was how I was able to do it. Clear lower value area here, less volume. We're not moving away, bouncing off of this bottom band. They were kind of flattening out. And when she did turn, she turned. Uh,
So that bottoming area there, I think it kind of caught me today because even though we weren't getting a new lower low, the highs kept getting lower. And I felt like the market was coiling up to really drop at some point.
you're
And it
kind of looking
didn't.
at a descending wedge in a sense, or a kind of a
Yeah. It felt like it
bearish
was,
flag.
yeah, it
Uh,
felt like it, but it didn't. It turned around.
yeah, that's
So
actually a great point because you look at pretty flat here, but we're kind of looking at that lower highs. Is this finally a lot of this is kind of a bearish flag, support, then finally boom. This is what you would kind of see in this descending triangle. That is kind of a bearish type pattern. So and that's kind of where I was. I did not have high degree of confidence that this support was going to hold. There's a lot of pressure bringing it up, and it took until lunchtime lulls to really have confidence. Look at the 1 hour. you know. So
yeah.
this final push back, I actually had zero concern about it going through. I was actually comfortable here. And so when it did come back up, I was not surprised to finally see this because of one, two, three, four. I mean, within 5 hours, four big money was supporting this area. So that's larger time frame. Key area of support, and on the 1 hour time frame, just be able to see that really made getting in here and letting things go to recover. I did get up and walk away a lot more. I had some things I wanted to do, but I was like, hey, worst case scenario, I'm going to be well. I was at risk of that one account because I was down 1,400 and then 1,000 and then 700, and it slowly come back. And which goes back, I still haven't told you my number one rule for 2026, what I'm working on. Uh, because I was not successful with that account today. And the reason I was not successful with my number one rule that I'm working on is because I went over to a mini, expected a big pop, little push up to VWAP, and it just rolled over on me. And so now I'm behind. That, again, I literally did what I don't want to do. Inexpensive lesson. I was able to recover it. So an inexpensive, huge lesson that I've got to work through today. Uh, because my number one rule, are you ready? I've been trying to tell you this for an hour now. Number one rule that
Okay.
I'm working on is no longer lose more than what my normal P&L target is for any given day. In other words, I don't need to have 4 winning days, $200 at a pop, and then accept an $800 drawdown on the fifth day, or vice versa. You see the logic
No,
there?
I'm following. Yeah.
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 So that's been really good January, most of February, and then I just kind of went flat, and I kind of got, and it'd be like I'd have 9 winning days. But it would be like that 10th winning day where I would lose, 5, 6 days worth of games. And that
Hmm.
is just, it's just stupid. Um, and where that really come in was, hey, these candles were closing, at their high, or they were closing at their low. We wasn't getting that return back towards VWAP or that balance on a lot of those days. It just takes one of those to really depend and count on, market kind of returning to center where you think you're going to be good, and it works 7 out of 10 times. But that 1 to 2 times where you've got the wrong size and it doesn't come back, it can ruin 9, 10 days of profit. So what is required to ensure that a losing day is now very seldom, if ever, greater than the normal winning day? That's my number one goal. And that's
Yeah.
kind of where understanding these deviation bands, how they line up with the developing volume profile, how these point of control here, how are they related to the VWAPs themselves, and what's the relationship between the Globex VWAP and the New York session? Utilizing that structure, and kind of done away with 5 point. Hey, babe. Hey, babe, can I call you back in a little bit? On the middle of a Zoom. Your hair looks nice. All right. Talk to you in a bit. Bye. Um, that was my daughter. So for don't forget, but consider that the candle behavior, yeah, that can give us a lot of insight of what is happening right now. But to have an advantage and to be a lot more consistent and know when the trade is still working, even though your P&L might not be reflecting that, is you have to almost remove the wicks, remove the candles, and say, hey, what is price actually doing? How is price behaving around a deviation bound, around VWAP, and are those bands lined up, or what's the relationship with those upper and lower value areas of your profile? So here's a deviation band, here's a deviation band potentially.
Hmm.
Point of control, what's its relationship to the VWAP? A point of control, oh, these are so valuable because point of control is hands down one of the most uh, areas, consistent areas I'm looking for to either add or get in or decide if I'm going to get out. Because when we get a price price is starting to kind of move up, and all of a sudden point of control might be down here, and now it does kind of move up. For one, you had a lot of volume early in the morning, but now when I've got a point of control that is above, and it's a developing point of control, but it now is above VWAPs. That to me says, okay, highest volume, highest number of transactions at a specific price is now above the volume weighted average price of the session, either New York or the Globex. So what does that tell us? If at this moment in time, there are far more transactions and the candles themselves or the price is bouncing off of and continuing a little bit higher, and that point of control is now pretty new, meaning it's maybe just kind of established, but it's above your VWAP. That'll let you know that there's a very large number of transactions that are saying, hey, we believe it's a fair price above VWAP now.
Okay.
Very, very, very important, because Trade Evade is really good with the volume, the point of controls and stuff on there. And I'll continually just stare at that, but we can see how many times your pullbacks. So if you're overall bullish, well, these pullbacks, man, if you've got a point of control that's down a few points from where you currently are, but you're looking at wicks, you're looking at the closing of candles continually finding support at that point of control, and that point of control is above your VWAPs, that provides some excellent opportunities to either add to your position or get back in. It's very bullish. When your point of control, which is the specific price where the maximum number of transactions have occurred, and that is below your VWAP, then we know that the largest number of transactions, the specific price, if it's below or less than your volume weighted average price, that can be, hey, either there's a lot of support right there, and so there's a lot of transactions occurring, but we have to rule out the fact that, hey, big money says price is not quite worth the VWAP price right now. They're only willing to buy it a little bit lower, or they're actually selling, around VWAP, or they're selling at that point of control. And so the selling pressure very much could be a little bit greater when that point of control is below your VWAP. We just got to realize that, hey, at support down in here, you're getting a lot of volume, and yet it's buying pressure, but that's because you're at support. What's the context? If it's support, there's a lot of transactions. You got people that are selling down into here, and then buyers are turning around right where the sellers are done. And so you've got a large number of transactions here. Well, it's in a low value area. So you're not getting all these transactions. So what's bringing this price back up? And that kind of lets you know that, hey, the bears cannot hold it down.
And I've noticed that I look at the point of controls when I want to move up my stop loss or move down my stop loss. I look at where those point of controls are, because if I'm moving up my stop loss as the market's going up, I'll pull that up to like the neck right below the next point of control. Because if the market comes down on a drawback, it usually will get caught, not usually, but sometimes it will be caught by that point of control and then go back up again. But my
Yes.
stop loss was below that point of control, so I didn't get stopped out. So I find that doesn't always work, but it has worked, I would say, over 50% of the time for me. So,
And here's a great example. Here's the current session. Okay. Point of control is here based on all this transactions going through here. So this is just kind of developing, but you notice how our VWAP is like right here in the middle, where bottom band, upper band, bottom band, upper band.
Mhm.
But now we start seeing VWAP holding a support, and this point of control was probably there, but well, it definitely was because we can just tell by all these candles. Now, point of control, VWAP agreeing up and away. No business ever looking at shorting when these conditions exist. Doesn't matter if it's a brand new session or if you're well into the session. When this point of control and this VWAP, this lets you know, hey, very large number of transactions happened at VWAP, built a point of control, and price, what did it do? It went all the way up through the value area. So absolutely, we know we're bullish and we're going into a higher value area here. Okay, could we be getting some exhaustion? Well, keep in mind, you're up away from this deviation band. Price doesn't stay away from this very long, even in a trending market. Comes back down to this deviation band, and if this holds a support, now you know that, hey, we're in a trend. But if we come back down to this band, it kind of goes below, back up to the band, exhausts, and kind of rolls back over. Now you know, hey, it looks like I'm probably going to come back down into this value area where there's balance in the market. But this right here is now our only key level of interest, really, is this upper deviation band at this point. Because it's either we're going to remain long, we're going to come down and find support off of this band and continue long, or we're going to come back through it, it'll reject, and then it's like, okay, that would be a great opportunity to come back down to VWAP. But the only thing we really have to pay attention to now is how is price going to stay in relationship to this upper deviation band. That's the only thing we're interested in right now. Because if it comes down and bounces off of it and continues up, you're in a trend. Absolutely. If it comes down and then a lower high, and then price begins to come below this band, hey, you're at exhaustion and a high probability you're going to roll back through into this value area. So a valid target would be back down to VWAP under those conditions. When price is now consistently staying back below an upper deviation band, you do have a high probability of a VWAP coming into play. So once we committed to a trade in this area here, the only thing we're really interested in is a deviation band. Everything else is noise.
Yeah, and what's interesting, the VWAP right there is about even with a slightly larger bar over there in the yellow area. So I could see that if price did come down, not only do you have the VWAP there, but you have a little bit of a point of control right there, also reinforcing that that's where the market may settle.
You talk like this blue.
No, keep going down. Right where VWAP is. Yeah, right there. See that bar is a little bit larger than the two next to it. So it's not a very strong point of control, but it's kind of it's there's been more transactions there. So
Oh,
I could
okay.
see if the market were to come back down and may settle out in that general area.
Yeah.
Would you agree to that or
Yeah. And here's the beauty, because that's a great observation, is, looking at these bars here, this is where it really becomes key is, hey, you got VWAP point of control. So big money a lot of times likes to come back down to that VWAP or point of control, but you're kind of seeing
Mhm.
volume spikes. We're used to seeing them kind of down here on TradingView. I've
Right.
got cumulative volume delta down here, but well, here's a volume here. So we're used to like looking at these volumes here. Well, that's all we're looking at here. So you're absolutely right. This is a green candle followed by a green candle. So you can say, hey, this is very bullish volume, very bullish volume, but it happens to line up with VWAP. It happens to line up with, here's your deviation band from the previous session. Well, here's the second. Let's see here. Okay, yeah, I was just kind of looking at this one here. This is our second deviation band, second derivative from our New York session VWAP from earlier today. So the fact that because you can look at that, this upper band, second derivative band, is up in this high value area above the volume, the majority of the session volume. So here's kind of our second derivative VWAP band. Well, look how we just bumped right through that in this session we're
Mhm.
starting now. We just bumped right through it. But to your point, yes, larger candle right here kind of comes up, price comes down, kind of comes up, but wicks back down. So there was a lot more volume that happened right here between these four candles. A lot of transactions were taking place. Just like we had, multiple candles here. That's why we got a larger volume there. But this kind of coincides with a nice retest into this area, a nice retest possibly down onto your VWAP. That's the confluence that we're really wanting to get at. So that's an astute observation. What you're looking at that volume there, you're looking at, hey, there was a little battle here. And if we do have some exhaustion coming in here, let's see what price does off of this upper deviation band. But ultimately, if we come below this band, wait for a retest, and if it gets rejected, I'm just looking at a target on VWAP and won't even think twice. That is a very high probable setup. It might not be, again, we want it to be, see, again, that's 3.7 points. That's not much, but you look at what's your risk. So if we get off, look at this band, hey, you got 3.25 versus 3.75. Hey, you've got a greater than a one-to-one reward to risk at this point here.
And when you set up, when you're looking for to get into a trade, that's what you're always looking for. You're trying to identify those trades where your risk is always smaller than your reward.
Yes, yes. And let me finally say what I've been trying to say for 2026. My ultimate goal, well, I did say it actually, is trades now, they will make sense from a risk perspective to where if it goes to that point where it no longer makes sense, I cannot lose more than my actual normal winning day would be.
Yep.
So that's where getting in down here, anywhere along this band, hindsight is always accurate because of this New York session VWAP below this one here. I opted to not be aggressive today, and I only had two accounts that I was trading from this point on.
Mhm.
Because historically, my data says, dude, you don't do well because I'm a perma bear. I am a perma bear. And when New York session VWAP is below Gobex, because of my perma bull, I'm a perma bull. I said perma bear. I'm a perma bull, Kevin. So
Okay.
that could be so confusing. I'm a perma bull. I'm always looking for the bullish opportunities. I'm looking for the reversals. I'm looking for the bounces at support. I'm a perma bull by nature. That's how I'm wired. But when this particular VWAP, New York, is below Globex, my perma bull personality does not get along well with the crowd of the day as a whole.
Mhm.
So today I'm like, you know what? This is opposite of my personality. I don't historically do wells on these. I made the move down, locked in some profits, and I put those accounts to the side. I'm like, okay, I'm studying range. I want to be more comfortable with the range. I've got these two accounts I'm going to work on. So my goal was to study. It's like, hey, if we come down to Globex low, what is going to happen? And then we'll go back to this 1 hour. We kind of looked at it a minute ago.
Yeah.
So Globex low was right in here. That became my range study for the day. I'm like, okay, how much confidence can I put in this range? And it was pretty aggressive. It kept rolling back, kept rolling back. But once this one came in, Now my perma bull rose up. Confidence came back in once we got above this New York session VWAP, ultimately the Globex VWAP, and then it held. That I'm like, okay, I'm going to at least recover the account that I was working on. It was settled in my mind. But I really was uncomfortable here because historically my permabull can fail when this VWAP is below this one. When New York VWAP continually remains below the Globex VWAP, it's a bearish day. And my permabull does not do that good on a bearish day. And that makes sense, right?
Oh yeah. Yeah.
Makes perfect sense. So I want to make sure um, your homework. Uh, let me write something out here. Okay, I want to cover homework. I want to cover opening range. I want to cover initial balance. I want to kind of cover that uh, kind of that anchored VWAP we had at 12 o'clock. So basically, we're going to call
Okay.
that lunchtime box. We basically trade that same as the opening range. Um, and that, and the reason I wanted to throw these things at you, I want the framework, your homework. I really want you to start paying attention and then starting to, because it takes a while to trust those value areas on that session profile. But it's not so much a session profile homework as it is your VWAP and deviation bands and how these blue line, that is nothing on this indicator that shows the clear delineation between a upper value area and the lower value area. In between the blue lines is the value area. Okay, point of control is largest number of transactions within the volume area.
Mhm.
Homework is to start training your brain, because my heart's desire for you is to get to a point where indicators mean nothing to you. You really understand price structure as a whole, and VWAP and volume profiles, they can be far more advantageous to provide us a higher probability of where price is going to go in the future. They're not lagging as much as a moving average is. Even a VWAP can be, again, you could argue what I'm saying because everything's lagging. It is. And nothing is going to tell you what's going to happen. But what price has done, and 70% of transactions do exist within value area. Big money, smart money is looking to leverage that fair price. We'll say a fair value price is at a VWAP / point of control. That's where big money says, hey, I want to get in for longs if they're bullish on a price. They want to get in as low as they can, and VWAP kind of becomes a result of where a lot of transactions are occurring. And if
Okay.
big money says, hey, I think it's a little overpriced, but I want to go ahead and offload some of my shares, they're waiting for it to come back up to what they call, hey, an overpriced VWAP, or point of control might be a little bit overpriced, but they want to offload some shares and bring that price down. And so 70% of our transactions, and if the market is in a range 70% of the time, and isn't that interesting? We hear that, hey, you're ranging 70% of the time and you're trending like 30. Well, the default settings on our volume profiles is 70% of the transactions in here and 30% out here. Okay. And if you want to be the best trend trader, trend is your friend, but you just can't count on it. He's only going to be there for you 30% of the time, but your range buddy is going to be there for you 70% of the time. But if you can learn to trade the range, then the trend is even going to be that much greater when you are in at the bottom of a trend and get to ride it all the way up through. And if you get a breakout above this value area high, you're in a clear trend and now it starts bouncing. See how we bounced off of this deviation band here?
Yep.
That's bullish. We're in a trend here. So if we can get in a position down, like around the VWAP bands above point of control here, we pretty much just stay in. And now we can start looking at moving our stops, especially if it's late, you're getting up to walk away. Hey, I'm green, break even's clear down here, but you know what? As long as I'm staying above this, into this high value area, I'm gonna milk it for what it's worth. That's a way. That's definitely a way. Guaranteed winner. But nothing more important, in my opinion, for you and Michelle, myself included, is to start looking at the charts, not so much with what do all these freaking lines mean, but what is 70% of our volume doing? What is happening to this lower percentage of transactions, and is it finding support? And if this is valid, what is the probability of us to come back up through this value area? That's what we're seeing here. How does this blue line, again, separating value area from high value, value area from low value, bands, deviation bands here. So you got Globex deviation band. See how it's towards the end of the session, it flattens out, but it's kind of coming down. But see how it's towards that upper part of this value area. So these bands line up with the extremes of your volume profile. That's what we're getting at, because why? What do I mean by extremes? Okay. At the extremes with exhaustion, look for return to VWAP / balance. Okay. At the extremes here, tough today. We're perma bulls. Is this going to continue rolling down? It could. But our ultimate goal is to be patient. And once we get this valid, again, we're at the extremes. So we should only be looking at potential longs back towards our VWAPs when we're down in this area. We have to confirm that we're not, and where you're going to see that is this continual rejection, lower lows, deviation band because continues trajecting down. It's not time to get in. We're in that downward trend. We don't want to, just because we're in a low value area, just because we're below this deviation band. A matter of fact, a rule is you're not really going to go long if you're below a deviation band. You need the deviation band to become support, because once it is confirmed as support, your highest probability is price is going to go back up towards a VWAP, back up towards a point of control. You're going to experience those successful trades a lot more than guessing. In other words, it's the structure. What is price doing? Big money is protecting down here in this low value area. We looked at the 1 hour time frame. We looked at Globex low. We could not break through this low value area. Once we're back above this first deviation band, a setup. It's essentially an A plus setup at this point. It says, hey, I've got a high probability now that I'm above this low deviation band to go back to VWAP or a point of control. That's a rule. That's a setup. I would write that down as one of my setups. Okay, so that's the extreme. We're bouncing off of support. We found support with a lower deviation band. A plus setup essentially says, hey, I'm going to go back to VWAP now. Here, up through this deviation band, it holds, and see, it comes all the way back up to VWAP. Okay,
Yeah.
here, come down, we retested the low, we're above it here. Okay, I guess we did kind of touch it there. And this is kind of, I think, where I got in right here. I was expecting another pop up there, and that's where it failed. So again, you're overall kind of bearish. Hey, that first attempt is going to be your highest probable attempt. So just because you come up and wick into your VWAP, hey, that trade, that A plus setup is no longer A plus. We come back down to this band, hey, we happen to get it again, but there's no follow through. This is not as good as a setup as this is over here. And then you say, this is even worse. We didn't make it up to VWAP. But what information do we have now? Well, we have deviation band flattening out, VWAP flattening out, but we've got some clear protection, institutional money protecting here. Now we're above this band. Now I'm back to A plus setup. Again, time of session. What time of the session is it here? Right now you're looking at that, it's 1:30 p.m. It's middle of lunchtime. So from the bands, but you're on the VWAP side of your deviation bands, it's no longer really a 5-point target. Your target is going to be that VWAP. And very possible up to your other band again. Same thing when we look at so here's yesterday. Here's Friday. Okay, pre-market news comes back down. Opening session right here is our 15-minute opening session. Again, look how we just wick into this lower band. That's that start of session or early in the session kind of liquidation. This proves to be support. Highest probable setup is trying to get anywhere here back up to VWAP. That's how you can start your day green. Well, we happen to just go right back up through VWAP up to our second band. Okay, we've got a pre-market high. So again, great opportunity. Once we cleared here, I mean, it was, you knew that the bulls were in charge. But look what we learned from the band here. So lower deviation band, you notice I don't even have a 21 EMA or a 5 EMA on here. And I still
Do you
use
still
those
use
quite a
those,
bit,
or
but say that again.
do you still use those
I do.
EMAs?
I do. I do. But
Okay.
I'm really focusing because it's been about probably 5 or 6 weeks where I've really been trying to understand. I'm like, wait a minute, if 70% of my transactions are happening within a kind of defined area, my highest probable area for a reversal is going to be at the extreme of these lower value areas. Then I'm looking, okay, how does my deviation bands, because here's kind of Globex, Thursday afternoon Globex, but again, look at this low value area where, see, here's where VWAP price started down here at the bottom. To see how this deviation band kind of stayed at the extreme at the lower part of this value area, because you got to remember these bars are gold clear up until end of session on Friday.
Until the
So
radar
this,
trade session.
yeah, so this is 70% of our transactions that occur well after 9 o'clock open, the following day. It's not until price comes up here, then much larger volume up here than actually occurred all night long down here. But this band here at the bottom part of this kind of low value area, deviation band happened right here, kind of in the upper area, but above VWAP. Just how are these bands, and do I have lots of more volume in the middle, which again is a VWAP, volume weighted average price. So it makes sense that it should be somewhere in the middle of your largest volume area. It makes sense. Here's a trending VWAP, which we know, hey, price discovery. Price is coming from clear down here through the night, has a nice retest when New York session opens, but it comes all the way back up here. That is just a bullish move. Well, when VWAP is pointing up, it's a trend. It's a bullish day. So we don't. So this is kind of where this is actually a beautiful example again. What can we learn about this upper deviation band above VWAP when it works as exceptional support for the entire session right here? This is where, be careful. Don't expect it to come back down to VWAP before the market closes. It might bite you. You're in a trend. Now this is flat. This is sideways here, but it's the big money. It says, hey, we've got fair value price up here. They're protecting the price up here. So you don't want to short against when price is holding above a deviation band. I caution the shorts at that point. You need it to come back below, retest it, then back down into a low value area or back down into fair value price.
So in that time period, the second half of the day there, would you be setting up your trades to go long when price came and touched that white deviation band?
Absolutely. Absolutely.
You-
And
So
that's
you wouldn't be,
exactly how I did trade that. I can't remember I don't know if it was here, but had a little exhaustion, some lower highs. I expected another pop. I waited for a bounce off of the band. I got back in, and I didn't even need this pop. I hit all my targets and I was done right when we got back up into this area. She come back down again, but I was done. I think I was done here. I was shocked to look back later in the day and see, oh my goodness, we made it back up
see
there
it
like two more
happen
times.
again. Yeah.
But I absolutely did. Um, when this came in and we had a little exhaustion here, I'm like, this is far from over. I stayed in. I seen these wicks come right back above the deviation band. I added to my size, popped up, hit my targets. I was done solely based on the VWAP. And that's
Okay.
what differentiates, this. And I said VWAP, but I'm using the deviation band
Yeah. Yeah.
directly tied to the VWAP here. Now that's what makes the 5 EMA a little bit different from these deviation bands. 5 EMA is very lagging because it's like I need that signal candle, to come below the 5 EMA to trap a preceding bear candle and close above the 5 EMA. Okay. And that actually is a great strategy. It really works well. But when I'm utilizing the deviation band as the entry criteria because I'm bullish, now I'm not waiting. So there's my 5 EMA might be because it shot clear up here, it's kind of coming down. My 5 EMA is clear up here. I'm actually getting in off this deviation band now.
Mhm.
And now my risk is literally I could easily come back down and retest this here, but it's wrong. I'm wrong just if it just flushes, it could flush back down to VWAP. But on this bullish day, a lot of times I am looking at my VWAP. Below VWAP would be my risk. But again, do I have the right size on that? Now, can I handle if I actually get in here and I don't get profits off the table there, which 15 points, that would be silly not to. But back down here to VWAP, see by the time I get a few candles, so I got 13 points there. Where if I'm off the deviation band there, if I want to get to this upper value area potentially here, well, there I've got, my 14. So at least I've got that 1-to-1. And I really am now. It's like, hey, the 5 points, they're great, get in, get out. But I'm like, that win rate of 70, 80% sounds great, but it's that losing size because when
Mhm.
you lose, when you're only targeting 5 points, I'm not good at getting out at 5 points because the trade actually still makes sense, even down 10, even sometimes 15 points when we start looking at overall price structure. Now, that's kind of my cutoff line is I've got a 20-point objective every day. Um, so that's another thing. So I don't put P&L. I don't go by P&L because if I'm trading 1 micro on a small account, or if I'm trading 5 micros on a 50K, I don't look at the P&L and care about the P&L anymore. It's like, hey, did I get my 20 points for today? And if I can get that done in one or
And
two
that and
trades,
you could be trade depending on the trade, you could have 1 micro or 5 micros. You're talking about points here. You want to
exactly,
get those 20 points.
exactly.
Okay.
Yeah. Now my smaller Lucid accounts, I will scale into those until I get a lot of confluences and a strong sense of what it's going to do. A lot of times I'm just one, and then I'll add two. Once I get a very clear picture of what's happening and VWAPs are working excellent as support, then I will start with two, and I look for pullbacks, and I'll add two more. Because to get 20 points, again, it when you're in a trend, or if you get to go from the bottom part, like what the lower part of one band up to the upper band. I mean, one of those a day is objectives met.
Hmm.
Um, but I kind of treat my 25Ks Lucid accounts, 2 micros kind of as my base order. But I will go up to 4 on those because I will add two when I'm real confident. But two is kind of my base size on a 25K account, where my 50Ks account with Blue Ski, 5 micros is kind of like my base size. I can handle that movement through the full value area with 5 micros. When it continues beyond the extreme, when I'm long and I'm now breaking the extreme low value area, that's where I've got to say it's enough. But 5 micros doesn't hurt me so bad, if I'm wrong on the trade. And so I give it room to breathe. The room is these are golden bars, when this New York session opens up here. Here's the room right here. So when US market opened here, especially coming down into here, here's my risk. Here's Globex low. But if I can get into like here, I'm intentionally looking for a bounce off of this deviation band. If this holds a support, I've assessed low of day. Hey, that's the best start ever. So I'm looking to get in this area here. And now I know that my Globex low, hey, I've only got, 14 points that I'm risking. So I may start out, if I start out here, maybe like 2 micros, I don't get rid of it, it comes back down. I'm observing this really close. Is this deviation band going to hold? If it does not, then the trade is no longer really making sense here. I do have Globex low. It still makes sense all the way down to here. But I've only got 2 micros in until I get up and I hold above this VWAP. Now I'll be looking at my second 2 micros. Next target is going to be this deviation band, upper deviation band. And I'm probably going to cut sling. I'm going to say, okay, I hit my valid target. I'm up to the upper deviation band. Can this hold? Well, it comes up, a couple red candles, it holds. So yeah, I'm looking at I'm looking at getting in right here. Say, I do have a valid target here. And I did catch that pop. Timing was just perfect. I caught that pop. But that was, again, based on we come from this band, we're above VWAP, and we're above this deviation band here. I'm like, I can absorb, my risk is down to the VWAP again. Actually, my stop was below VWAP here, because I would have played a ticket bounce off of VWAP, but happened to catch that pop. So that's what I mean by the extremes. We start looking for those reversals at the extremes, but when you're in the extremes, you could be in a trend.
Mm-hmm.
And so we don't want to counter trend trade when we're in a bullish trend. But that's where, if you're below that deviation band, your probability of being successful to come back up to a VWAP or down to a VWAP is much higher than if you're getting in above the deviation band, because that is indicative of a trend. Big money is saying, hey, we're going to go and explore a new area where we think there could be a fair value price, and it could just continue going up. You don't know how long before it decides to give you a pullback. So above deviation bands, in the extremes, it's not time to counter trend. But once you hit that exhaustion, you're above that deviation band, then you come back, and then that deviation band fails. Now a probability. So again, you start looking at that A plus setup fading back into balance, back towards that VWAP, maybe even towards that other band or through the value area. And it really could be one and the same, from deviation band to deviation band, from low value area to high value area, to VWAP to point of control. Homework is to kind of start seeing how they can give you an edge on, hey, am I at an extreme? Am I exhausted? Is it time to come back to point of control? This is definitely bullish. Everything is lining up. I'm going to stay in my position. It comes back to VWAP or point of control. I'm adding. And then when I do add, that's where I don't hesitate to, start taking some profits off the table. It's like, I don't care if it's shy of the upper deviation band bouncing off of VWAP. I'm not even going to risk it. It's like, hey, I've really locked in some profits. I'm just taking targets at that next key level. VWAP bounce are some of our biggest. So US session this morning. Okay, we open up kind of below VWAP. This is the Globex VWAP. Rejection, wick, rejection. So that's pretty strong confluence, especially pre-market, a lot of bearish moves, but this is nothing more than bouncing off of VWAP and literally getting in at the VWAP. Because if you get in at the VWAP, well, you've kind of got this high established up here. Here's where it no longer makes sense, but you wait for this to come down. But really, if it comes back up to VWAP, and when this wick comes in, hey, there's your opportunity, first opportunity to possibly get in. And this is where you might do a little bit more scalping, because again, this is it's early in the day, but what is happening with the VWAP? This is just a VWAP bounce, winning trade. VWAP bounce, rejection from VWAP, I'm in. VWAP becomes the entry objective. You've put an entry in here, you have no follow through. You can tell right away if you're wrong. And then you get out. But this is an actual bounce, high probable setup. And today, the way it should have been traded, you come all the way down here, we hit Globex low. You come up, rejection at the New York session VWAP. That should have been a reason to go short all the way back down to this band. Take profits off the table. You're short. Hey, you don't quite make it up to VWAP. Maybe you missed out on a trade there. But now you got, hey, I'm above it. I'm above it here. Let me go in and see if I can't hit VWAP here. So now you're above the band. Okay, you're a little bit short. You see this indecision trap candle? Get out right there. But what did you just get by utilizing the deviation band? Even if you're a little above it, your target was, 9 points there. But let's say, you know what? I'll at least take 3 points off the table. And why are we going to be very protective of it? Because we failed to achieve VWAP. New York session VWAP is below the Globex, and we're in a bearish trend. But we picked such a good entry that on a bearish trade, we actually still got 3 points out of that. That was how I traded a lot of that this morning. Working on some of the recovery. Again, I'm just looking at some of those bullish moves coming in. Again, above this VWAP, you got the same thing right there. It fails to hit that Globex. So it's like, hey, I'm wrong, so lock in a couple points. And now you've got a follow through of a green above this deviation. That's when it was game on for me. Was right in here. So the extremes back to VWAP, but looking for that exhaustion. And again, that's going to be the failure or rejection of those deviation bands from extended levels away from VWAP. Okay. We talked about the homework. So now I want to wrap up, Kevin, because here's what I really like about New York session. Because we've got an opening range, stands on its own. You can trade opening range. If you're understanding some of the session volume profile, you've got good support at the bottom of the range. You can trade back up through it. If it's very rangy, top to bottom to top to bottom, well, you just wait, but then you're going to trade either down and away from that 15-minute opening range or up and away.
Yeah, and you are referring to the 15-minute opening
I
range,
am
correct?
absolutely.
Okay, just want to make sure.
Yeah. So every day, 15-minute opening range. So you had New York session opens up right here, 5:30 Alaska time is 9:30 Eastern Standard Time. Okay. Within 5, 10, 15 minutes, we get this wick up here, upper limit 15-minute opening range has been established. There's no follow through. There's nothing above the 15 minutes. So there's nothing at all saying, hey, it looks like I'm going to go long here. But then we come back down, we kind of retesting, and this we're below this New York session VWAP. It kind of starts out here, and this is developing. It's tough to make decisions just off a few candles with the New York session VWAP. But this is kind of what we're looking at. But 15 minutes is here and gone. We're still right in the middle of it. But here's where trades within this 15-minute opening range can actually start making sense. Some of this crazy, because this is fast, but now we have some price structure developing. We've got a wick rejection from Globex VWAP. We are above, but we're getting rejected even below the band of our New York session VWAP. So bears are showing up. And we know at this point here below this VWAP, hey, we should be good. I got to make sure I'm staying, once I break below my New York session VWAP, my confluence to be confident that I'm in the right direction is, hey, now can I stay below this New York VWAP? That's what holds me in the trade. Okay. And so 15-minute opening range, a lot of times it's on a very bullish day, like this bounce off of this VWAP, we would sometimes expect, and this is where I did get bit a little bit this morning, because of the bounce off of this VWAP here, I call it my morning kiss from ES. I want ES to come back and kiss that upper limit one more time because more times than not, it does happen. Uh, but when this wick came in here, I didn't get my kiss. So I'm like, okay, I'll just have to wait. Maybe I can have lunch with ES, meaning kind of bullish later after lunch. But I did not get my retest of that opening high. But it didn't take me long to let go of that. I was not emotionally committed to that because of a rejection right away. But that is my play. I want to retest that high. Things are so bullish. That's a high probable setup for me. But my New York session VWAP is below Globex. I was also aware of that. So I just wasn't totally committed to that, which is me growing up. That's okay. So what I want to focus on here's a summary real quick. Where's my notes? New York session. Okay. Some people like the opening range. Boom. They're in, they're out, they're done. Not everybody can trade the opening range, and some people refuse to do it, and they're wise because, hey, they want it to settle down. They want to wait at least 1 hour. They want the market to kind of settle down and give them a better idea of what direction it wants to go. So from opening range, I will trade from the opening range to IB, to the initial balance. Initial balance high, initial balance low. That is another key time which produces a key level that stands on its own merit. So you can forget opening range. That's done. What is happening at that 1 hour time frame at that highest price achieved within the 1 hour and or the lowest price achieved at the 1 hour mark? So forget opening range at this point. Now I combine the two because once I break up and away or down and away from opening range, if it's still within an hour, then my target is going to be that 1 hour mark. Meaning,
And was today a good example of that?
today
The
was
initial
not
amount?
because, well, it was, but see, 6:30. This is IBL low right here. It come and literally tested the opening range low at the 1 hour. So
Mm-hmm.
it was perfect in that sense because now my next thing is here is like, okay, now forget opening range. That's over. I have an initial balance low. The initial balance low is actually established by the wick of the very first candle. But at 1 hour, we came and retested that lowest price achieved during that first hour. That happened right here. All we have to decide at this point here, all we're looking at literally is this 1 hour. What is price going to do right there? Is initial balance low. Here's the low, the lowest price achieved with that first hour. Now here's the 1 hour. Are we down and away from initial balance low, or is that support and we're going to go back up through the opening range? That is the value of initial balance based on that 60 minutes.
Okay.
It stands on its own. You wait for initial balance today, you are a winner because you get rejection. Here's your initial balance low. Little wick kind of bounces right up there. She immediately rolls over. If you would have got in there and say, hey, I'm going to target Globex low, you just nailed it. That's a high probable setup. And you literally got in and say Globex low, you just got 14 points. And so that's a
And
trade that
when
stands on its
it
own.
came up to that initial balance, it was rejected at least two solid times. You can maybe
And
call
that
that
that's
third
again
flipper.
exactly right. So we target Globex low. So absolutely, you come back up. Hey, I'm taking profits off up here. Hey, my New York session VWAP is below Globex. Let's come up and see what price does around these VWAPs. We come up. I'm not in a trade anymore because I'm bearish. I get this rejection at this VWAP. Again, initial balance rejection. It comes back
Hmm.
down. Oh, deviation band. And this is where I'm starting to just set targets at the bands. I'm utilizing that VWAP wave theory literally as a target. So if I get back in at initial balance from this wick and I just target the VWAP, there's just 7 point, there's a little over 7 points. Um, so initial balance, rejection, rejection. It just lets you know, hey, bears are in charge right now. Oh, while I'm comfortable rejecting the initial balance, staying below that, I'm recognizing, and I look at my 1 hour time frame, I'm looking at Globex, I'm like, I'm getting a lot of support here. So I'm not even thinking about a target beyond this area down here.
Hmm.
Okay. Getting exhaustion down here, it's like, okay, I'm not even interested in really trading shorts anymore. I'm kind of now looking for my third setup. So 12 to 1 o'clock Eastern Standard Time. Where to go here? Well, I'll just do a box. Come in here. I'm looking at 8 o'clock my time, 8 o'clock Alaska time. Oh, it did drop. Okay, so it did. This is it. Um, Now, this is kind of a different strategy that stands on its own, and I've only been doing this for a week. Um, but here's the beauty of it is gold line is middle of upper and lower limit. So now we've got opening range we had up here. We had initial balance bringing us down into here. Now it's like, what the heck is going to happen from here? Do we have another standalone strategy that kind of gives us the kind of a box caution zone framework to work from? And one, is there some rules that allow us to trade within this box during a specific time, 12 to 1 o'clock Eastern Standard Time? Yes. So here's a standalone strategy that is just designed for that time frame. Then, just like our opening range, if I'm up and away from my lunchtime box, or if I'm down and away, then that is the direction I'm going to trade if I'm continuing to trade, which 10 o'clock for me, I'm still trading usually up until 11, maybe 11:30 Alaska time. So I'm trading up until 2:30, 3 o'clock Eastern Standard Time. Okay, so this lunchbox here is just, I'm done with the opening range. I've got my initial balance trades. Yeah, I was looking for that A plus setup. Did I get it? Did I not? Once that's done, now I've kind of got support here, but now I've got a specific another box. I'm just saying, hey, lunchtime New York, what over time is happening? Now here's the nuance of it. Let me bring something in here too, if I may. All right, just okay. take that there. Can you see that on there?
Yes.
Okay. Full disclosure, that is from a different group, but it's kind of live futures trading, but it's a prop firm match, is what they're called. And they are the only ones out there that have a database system. And it's a cool little system they have where it's got data that's got your probability of fading at this time from that New York session anchored VWAP. So that's another thing we're doing. That's why you seen that yellow line on there. So at the beginning, at 12 o'clock Eastern Standard Time, that first candle, you've got now a brand new VWAP that you're looking at. So all bias is kind of out of the window. Now I don't. I only trade this lunchbox from this YouTube video I've got here as it agrees with my overall plan. And I'm like, hey, I like the fact that it stands on its own, but I want to integrate the data because I can't beat the data, meaning they provide the statistics on what is happening in this box, where price is relative to this midline or this noon or 12 o'clock anchored VWAP. And they've got all the data on ES and NQ. It's like 70%, it will sweep the low one more time. 50%, and it's 30% that it's going to go back up to the high. I mean, it's phenomenal
Mm.
to watch, and it's incredibly, incredibly fun. Today, it was a fun trade because we come in and made this low right at 845. The data says we've got basically an 80% chance that we're going to go back up to the VWAP. Well, it was actually back up to this. Yeah, it was actually up to this VWAP. I want to make sure this is the, yeah. So even though the box itself is not over, but because we hit this new low, I literally immediately went long and I had like 20 micros, 10 micros. So basically 1 mini, but I just added 10 micros right off of the long here. And I set up take profit 20 micros at this VWAP. And so it literally shot up. It was actually this candle here. It shot up, took profit of 10, and then immediately bought 10 more. So then it was short coming back down because the data here is we were going to sweep the lows after we hit the VWAP one more time.
Huh.
So I went long based on that data, 20 micros, 10 micros, but my take profit was 20 micros. So I 10 micros long, and then I was immediately 10 micros short and brought it back down here to this band. And then I closed my trade because of this support. I'm like, I'm not going to stay in past 12, even though the data says, hey, we're going to sweep the low. That was not on the table for me today based on this support here. But I did took a mini all the way up to this VWAP, sold that mini, bought another one for short, and right down to the VWAP. All that happened within just seconds. Bloop, bloop. And it was just data-based. It was just data-based, but it's a trade that kind of stood on its own, and we were good to go. But because the initial upper limit is set first before the lower limit, then the opposite is at play, meaning for ES here, this upper limit here, you see, just look at the time frame. That's 825, and then we make a lower low within the box at 844. So the upper limit was set before the lower limit. So what that means is if that doesn't change, meaning the upper limit first before the lower limit, once you hit 12 o'clock, the probability of from this VWAP of taking out this low is like 7 out of 10 times.
Hmm.
If if the low, it's amazing. It's eerie of how accurate it is. And I don't go against the data, but I have learned to because they traded on the NQ. And
Okay.
we're seeing NQ and ES. Actually, I've had them where NQ is it's long, because it made a lower low first and then a higher high. So the default was long once the box was matured, where ES made a lower low first and could not make a higher, I'm sorry, it made a higher high first and did not make a lower low. So it was default short. So NQ was up, ES saying down. Well, I'm like, okay, that's a major um, divergence, between the two, if you
Yeah,
put it
I
that
would
way.
say
So
so.
I actually traded MNQ from the VWAP, went up. I only targeted that value area high and not the upper part of the box. Because again, I'm utilizing kind of my own system and I'm not going to go against the data, but when it agrees with my trading, what Jake wants to do, then I use it. So I'd set a target just at that value area high, the upper part of that session profile. Well, I nailed it on MNQ, but because of my ES setup was say, hey, you're going to sweep the low before you go back to the high. I hit the target on MNQ. That was my trigger to actually go short on ES. So I switched back over to ES, loaded the bull with shorts, went down and swept the lower limit, just as the data said.
Hmm.
So I got 2-for-1 lunch yesterday. Okay. As soon as I hit that target, I think that was yesterday. No, that was Friday. Friday was the 2-for-1 lunch. Yeah, because M and Q, I think we come up and swept, and it was right in here I got in on ES and come down and actually took out the low part of this box. Um, so yeah, so I utilized the data on that one there, and I just shared the YouTube link because it's not my strategy. It is what I'm doing. The takeaway is, hey, if you have an opportunity, you're looking for something that stands on its own from that 12 to 1 o'clock Eastern Standard Time. Here is a way. Fun. You'll just like it. It's just a blast to kind of understand how it works. I kind of tune out some of the stuff they're saying because again, I'm integrating with my overall plan, and when their data lines up with what I'm trying to do, it really works. It's really working well for me. Um, but the final big takeaway is you got the lunchtime box, but now trade it the same as the opening range. What do I mean by that? So now, once we come back up and took out this box, again, you see how we've got this New York session VWAP.
And bounce right off of it too.
It bounced right off of it. So I've got my box caution area, which I'm always using anyway. But it's like, hey, what do we really do in these boxes? Well, you need to wait. You can trade back up through them. You can kind of fade from the top back down to the bottom, but again, it's not as easy as it sounds. But like opening range, when we're clear up here, we cannot retest the high of the opening range, and we get clear rejection, and then we get our initial balance 1 hour, and we're taking out the lower part of our initial box, opening range box. Boom, we know down and away. That is a good high probable setup. Well, now we got our lunchtime box. Am I up and away or am I down and away? And so once you commit to longs above this VWAP here, well, at confluence here, what we really like is we're above this New York lunchtime VWAP. That's kind of a new indicator we're adding because it's standing on its own merit. What's big money now doing after they went and had cheeseburgers? Are they a little bit more bullish now, essentially? Okay, so we're above that and we're above the New York session VWAP. But ultimately, I want to stay above the upper limit of this box. That's where I'm really comfortable with my trade. If I get in here, is it really wrong to come back for a 50% retest? No, the trade still may make sense, but as a confluence, I'm above this VWAP. I'm above the deviation band from the noon VWAP. Most importantly, I'm above my New York session VWAP. It's holding. And then when we actually come back above the Globex VWAP, let alone come back down through it. This is like that VWAP bounce that we were kind of talking about earlier as far as one of the trades. Well, this becomes another one of those VWAP bounce. We bounce right off the New York session VWAP. We're up and away. So opening range, initial balance, okay, opening range itself, and then opening range generally to that IB. Because a lot of times you're up and away or down and away before we actually hit 1 hour. So if I'm down and away outside a 15-minute range, I'm very cautious to stay in a trade past that 1 hour. So keep in mind that 15-minute opening range, you may be up and away or down and away well before 1 hour. So my
Okay.
first area of concern, consider taking profits off the table, is hey, whatever that highest price was within that first hour, if I get back to that, or whatever that highest price was, yeah, whatever the highest price was, if I can get back to that and I'm approaching that 1 hour, I'm looking at taking some profits off the table if I'm in the green because it's a very key price zone that stands on its own. We have to now assess, hey, forget 15-minute opening range. That really goes out the window now. I mean, obviously up and away is very powerful throughout the whole session, but we need to see if that initial balance high is going to be rejected and you're going to fade back down towards VWAP, back down through that opening range, or you're going to stay up and away. So you got to look at it as it stands on its own. So you got 15 minutes, then you got that 1 hour initial balance high or low, stands on its own. Then we go into um, really the lunchtime lulls. Now you've got a box, and you kind of watch that video. And if that happens to be a time frame when you can trade, it's just fun. It's just one of the funnest hours now, 8 to 9 o'clock my time. I look forward to that. It's a lot of fun, but more significantly of my overall trading plan, it gives me a very stand on its own merit. What am I going to do really my last hour of trading? Am I bullish up and away from that box, or am I going to remain bearish down and away from the box? Or if I'm bouncing at the bottom of the box, that's my cue. And that's really what happened today is didn't quite sweep the bottom of the box back above these bands. So I got my quick, beautiful mini up to here, mini back down. And then I looked for my long back in here and rode up through the box. We stayed up above the box and we were good to go. So you got 15 minutes, then at the 1 hour mark, and then you got a lunchtime lulls, and then you got the final New York session just based on that box. Let's say you only have a couple hours to trade any given day. Well, if it's the first 2 hours in the morning, you've got that opening range combined with initial balance. Initial balance, we need to probably take everything off the table and assess, let it stand on its own, what is happening based on those prices achieved at that 1 hour mark or within that 1 hour. Um, then it's up and away or down and away. And then depending on what time your zone you're in, you start looking at that 8 to 9 Alaska or 12 to 1 Eastern Standard. Well, you're Texas, so it's going to be basically 11 to 12, 11 to 12
Yes.
Central Standard Time. Then there are specific trades within that box, but now you've got, okay, now I've got it stands on its own, gives me some confluence and it enforces what I've already, does it line up with my overall plan of the day? And are you up and away or down and away? And so you can kind of finish up the session there. So basically, there's four ways to break a New York session down and have look for some very high probable setups that all stand on their own. And that's what I think is cool. And that's what I wanted to get at tonight.
Well, I like the different strategies and thank you for going through them. Very good detail tonight.
Yeah.
Anthony, you have any questions? You've been
Oh,
so quiet.
Anthony, I didn't even see you jump
Yeah,
in.
yeah.
How
No,
long you
I
been in
came
here?
I came on a little bit late. I was trying to get on and then I had to update my WhatsApp and through the phone, then the computer, and I was like, "Oh, you got to be kidding me."
Oh my
Um,
goodness. How
No, it's
long you
good
actually
stuff,
been on
but
though? Because I thought Kevin was just making a joke when he said, Anthony, go ahead and close us out because we haven't been able to say that in a couple of weeks.
well, I didn't want to interrupt. You guys were on a good thought process, and I said, well, I'm going to sit back and listen to this. One thing to notice too, which now we're going to deviate into something else, is we've hit some all-time highs.
Yeah,
So, when you're trying to look for trend, the question is when have we hit our limits? But then, the other thing I'm seeing is day by day, if you look at the daily chart, we're having as many pullbacks. I mean, this morning I caught on a little late, but at 7 a.m. Eastern time, in a matter of 30 minutes, it was over a 100-point drop. So, and like I said, there is opportunity in the Globex to look at, some trading opportunities where you don't have the volatility like you do in the New York market.
yeah. And I'm
So,
glad you brought that up, Anthony, because I alluded to it at the beginning of the call and never finished, but I wanted to kind of, hey, my overall plan for like this week is it goes back to this box and this 7150 area. It was really key in like 7,200 and on ES. Just those numbers are going
yeah,
to be different
yeah,
in Q. But
sure.
bottom line, until we break below here and reject, we really don't know what it's going to do. All-time highs, just as you mentioned, until we can consistently stay above 7,200,
All right.
that's until big money validates that that's a fair value price. We can't do
Hmm.
it. And the reason that really jumps out at me because I remember waiting for this candle. And of course, this happened at Globex, so I watched
Hmm.
it happen in my sleep. But I knew then, I'm like, and I waited, for multiple days here. I'm like, if we ever break above here, I said that's when we want to go. So we're in a very what you just said, Anthony, is just exactly on point. And I got chopped up down here but
Yeah,
I'm not getting chopped up here because I'm incorporating a lot more of the volume profile and respecting not so much 5 point targets, but I'm like, hey, smaller size, but I don't know if you caught a lot, but we're really spending a lot more
yeah.
time on can we line up our VWAP Globex with the New York and hey, those
Mhm.
deviation bands, and do they line up with the higher value and the lower value areas?
Yeah,
And it's that structure overall that it doesn't matter because if you're in these big green candle days,
yeah,
price is staying above that deviation band and it just continues going. And you look for the pullbacks to the band, but price stays above it. Where in here, you go up to the extremes, it gets exhausted above the bands and rolls back down. And it's just such a
yeah,
safer way to trade when we can kind of clear up some of just understand the structure as a whole. So if we can become better range traders, then you have much better entries on the trend.
hmm,
And if you're wrong on a range, well, your risk is going to be a lot smaller than if you're wrong on a trend playing a breakout, at the upper part of a
yeah,
range. That's where I've really been focusing 2026 on. I'm like, I've got to learn to trust pullbacks and ranges. Uh, if I really want to start making a better living out of this, is kind of has been my goal. And
yeah,
then to
hmm,
cease and desist losing more on any account at any given time that is greater than what my daily objective is of winning that account. Again,
hmm,
walking away,
yeah,
putting things aside. And that's kind of what we trying to paint that picture of how is someone at least trying to address that. And I really, it was fun, Kevin, just to kind of walk you through how we could break up the session. And we even talked Globex at the beginning, looked at that deviation band and what we could learn from that, because it's no different than trading it is at the New York session. Other, it's a little calmer, a little slower, but the same 70% of your transactions are occurring between those deviation bands, or can we say 70% of your transactions are happening between the upper and the lower value areas of that volume profile? And it's looking for those confluences, for those bands and those value areas that come together, and then point of control, its relationship to your VWAP, and then New York session VWAP relationship to the Globex VWAP. Those together can paint so much more information than a 5 EMA, or a 21 EMA, because it can give us a better idea of what 70% of the time the market's operating within a range, and here's the framework that these ranges are bound to. That to me is what's amazing. So that's what we did cover. I just had no idea you
Yep.
were on there, and I don't know when you came on. So
Well,
I
I
thought
didn't want to
Kevin was
derail
being a
you.
comedian.
He was
Uh,
soaking it in, soaking it in.
I know. I was just trying something different, being quiet for a minute and let, which is not, I know my style, but
Uh,
um, no, no. So that's what I didn't, like I said, you had a goal in mind, and I'm just sitting back listening, taking it all in.
yeah, right on, right
Yeah.
on. But yeah, we're in a structure right now, all-time highs.
Yep. Yeah.
But what I just trying to say, hey, markets repeat themselves. There's really nothing new. And this was I went flat here. I did not trade well under these conditions. Um, Traded pretty good through here because as long as you were long, you were good to go. Um,
Mhm.
and I have literally just been focusing on kind of working the extremes. But here's the deal: 7,200. I'm looking for that 7,200. I'm looking for that break up and away from there, and
Yeah.
down. So I'm looking for this box here. I am just not committed to anything until we actually break out of those. That was the concern today. Was this these 3 or 4 days right here is like, man, if we were to break that support we had today, it's like that 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 would have put me in a bind on the one account that I was trying to recover. But we held right there. But that's the big box, big picture, larger time frame. We have to respect it. But,
Yep.
but that's a wrap. We are going on over 2 hours now.
Well, thank you. I'll be
Okay.
watching
Well, I
the
appreciate it.
the recording. So
Yeah.
Yep.
Yeah, I really enjoyed tonight. So looking forward to how you just kind of I believe with everything in my heart that um, seasoned traders, long term, consistently profitable. It's less indicators and more price structure and behavior. It's understanding where big money's trying to set people up at, where they're trying to get their positions, and then they protect those positions. And we can recognize what areas big money's trying to protect, which kind of becomes some of our extremes. Um, and we identify those. We're gonna have a lot better setups and better targets too. In other words, we don't have to just settle for that 5 and then lose 6. Win 5, lose 6, win 5, lose 6. And it just mentally wears you out. No, if we understand price structure and the behavior between these deviation bands and as they work with value areas, now our targets are always going to be, at least one, if not more than our risk. And that when I grow up, I want my risk to always be less than my reward. That's what I aspire to be when I'm all grown up.
One day.
One day,
It'll happen.
one day, and
Yeah.
it's happening. I've had a good year, and again, it comes down to I don't know if you're on yet, but good January, February from this year, and then I'm just kind of going flat, and I would still have 8 or 9 winning days in a row, but it'd be that ninth or 10th, and I didn't have the discipline, or it went into a big trend, and it never would come back, and I would lose a whole week's worth of trading in one day. And after a couple of times of that, I'm like, okay, this is, did I get back to a bad habit or what? What did the market change? And some of it was just the day was closing, the session was closing at the high of the day or the low of the day. Never did have any of that rotation back in on a lot of those. Had some of that, so I'm like, okay, there's got to be I'm missing something. So bringing in those deviation bands with the session volume profile is providing me some structure that is just giving me a lot more confidence in what I'm doing. And my risk is a lot lower because I'm getting in and just better entries. This is really what it comes down to. So I hope that really helps. And I'm really looking forward to coming back here in about 2 weeks. I'll be off the net next week, but I come back on the 10th or 11th. So I'm back home before the second Tuesday in May. So we'll do it again.
All right. Well, enjoy your trip.
Okay.
I will. Good to see you again, Anthony and Kevin. Always a
All right.
pleasure.
Yep.
Yeah.
All right. Take care. Thanks.
You bet. Bye.
You all have a good night.